Dear guests, now we are really very enthusiastic to start our sessions. As you know, as you have seen, we have distinguished speakers, all with very valuable backgrounds, and who will share with us today their insight in the business, and also they will share with us what are we expecting for the future in the digital world. Today, together with us, we have a senior, experienced business and insurance person from AM Best Dubai office, and he will be the moderator today, Mr. Vasilis Katsipis. I would like to invite him to the chair. Vasilis, please.
Thank you very much. I would like to invite our panelists. As you will find, we have a very knowledgeable and esteemed panel. And you will find out that they have, all of them, many more interesting things in their life than just insurance, which is always interesting to see. Difficult to believe, but interesting to see. So we will start with Arno Kopp, who's the P&C Turkey manager for Swiss Re. Arno, if you would like to come up. Followed by Mark Booker, member of the board of directors and market manager for Southern Mediterranean, North Africa, and Francophone Africa at SCOR. Probably he is the member of our panel with the longest title. Followed by Christian Mangold from Munich Re. He is regional director EMEA for Munich Re Parametric NatCat. Then we have Stavros Dimopoulos, VP of the Federation of European Damage Adjusters, FUEDI. And finally, you don't need much introduction, Neslihan Netsiboglu, GM of Neova Catalim Sigorta, and board member of the Insurance Association of Turkey. So we would start with Arno. As I said, he is the P&C Turkey manager for Swiss Re. He began his reinsurance career as a casualty insurance specialist and has held various positions in Swiss Re Zurich office. He's, apart from his day-to-day job, he's active in education and innovation. He teaches transformation in business at the University of Université Paris Dauphine and mentors early-stage startups through various accelerator programs. I know I would start by asking you to tell us what are the developments, how are you using parametric and AI in Swiss Re?
Thanks, Vasilis. Just moving there for the slides. Prepared some couple of slides for everyone. So good morning, everyone. Merhaba. So as mentioned by Vasilis, my name is Arno Kopp. I'm the senior underwriter and responsible for the Turkish market. And I had the chance to be an underwriter for all my career. So I just thought that I would use this opportunity to share a bit with you how we are now using AI in treaty underwriting and how I'm actually using AI in treaty and underwriting now since the start of 2025. As a start, I will just start by this slide. So what you see here, it's actually not medical record. It's a visualization of Swiss Re data. So on the bottom right is actually the most recent snapshot of our data landscape, and the top left is the oldest. Each color corresponds to a department, a business unit of Swiss Re. And what you're seeing here is, of course, some departments are generating more data over year, but as well, what is noticeable is as well the fact as how much data now is communicating between different data sets. And that has been able because we have focused a lot in terms of data strategy in creating one spot for our data. And I think the key message to start here is, from our experience, humble experience, if you want to start an AI strategy, you need to have quite a strong data infrastructure and data strategy, because without this infrastructure, it's extremely difficult to move forward and to create this kind of interactive environment between the different departments of your companies in terms of data. If we look at AI, so there is a lot of buzzword around AI, and let's look at a bit more back in the days where AI at the end of the day is data. Data is the DNA of our industry. We have worked with data for many, many, many years, and we have worked to improve our usage of data, storage of data, and the innovations around data through technology. And if you look at the time scale, it started a little bit with the traditional rules-based underwriting engines, but we're still using these days in underwriting in some lines of business. And it moved to machine learning, and I think a good example of machine learning and deep learning is in the Turkish market, for example, I can refer to motor, because in Turkey you benefit from a fantastic infrastructure in terms of motor insurance, which is shared across the participants, which allow the development of these machine learning models. From a Swiss Re perspective, that comes, for example, in terms of NatCat with stochastic model, where we have increased our power in terms of calculations, but as well having models which are a bit more refined. And as Charles Whitmer was mentioning on the secondary perils, these perils are challenging, and we need to come with new approach in terms of modeling, where AI is a great help here. And we are moving now to generative AI, which is, at the end of the day, is the usage of the data, but I think what is changing here is the ability to have a certain independence in the decision-making through the modeling and through different models interacting between each others. In terms of the AI transformations, we are seeing three waves. The first one is the productivity gain. It has already started. We do still an important amount of things manually in our industry through Excel spreadsheet. And that is just the next level of automation that we have started, where on top of having things automated, some low impact for the business decisions can be done automatically through models. Now, the piece we are now, which is the second wave, is the interesting piece, because now we're using these vendor models, which is OpenAI, ChatGPT, these vendors models, or potentially your own models that you're developing based on these vendors models. We're starting to apply it to our business. So meaning here to underwriting and how we're using and treating underwriting. And my next slide, I'm going to share a little bit with you my personal experiences using it. And the third one, which is a bit the vision here, is how we will be able, through the different use cases that we're going to build in the next years in using AI in underwriting, to create some underwriting assistant of the future with this use case integrated, and where part of the decision-making will be automated, and how the underwriter can be supported through artificial intelligence going forward. If I look at currently how I'm using AI, so that's really based on my own experience. The first thing has been leveraging unstructured data. As a reinsurers, we have the renewal peak, and then we have the off-cycle work, which is basically trying to leverage the data that we have used this renewal, and as well trying to do some analytics, refine our understanding of our portfolio, and think about how we can optimize things. You would still now, in Swiss Re, I still need to use several data sets. I don't have everything in one place. It's getting better, but still, typically, we will still take some students to help us to create this overview master file. But now, with AI, we can actually move from unstructured data, and unstructured data starts by your contracts. How AI can leverage you to take your contracts, all your contracts, and put it into a structured file. Because with that, you suddenly have the overview of your book. And out of it, you can start to use AI to run some analytics and some visualization for your portfolio, how things are moved. So typically, how the market has moved in terms of cluster zone distribution. That will be a typical one that we are looking year on year, and as well how clients as well are moving versus the market. So that is something that we have used heavily since the start of 2025. Submission assessment, which is renewal. So typically an underwriters in treaty will have to do a couple of comparisons with submission. So you are going to compare the treaty year on year. You're going to compare the risk profile, how the losses, and how the large risks are moving year on year based on the submission. And you would be amazed still how manual we need to do some things where you still have the two submissions next to each other and you're comparing line by line how a claim has moved in terms of paid, incurred, and reserved. Now, through AI tools, you can actually be much faster in terms of the submission assessment and comparing this, and as well comparing your client versus your client last year, so really looking at this change and really linking the data with the strategy of the client, but as well versus the market. So in terms of the submission assessment, I see a massive potential. We have just started. It's going to be the first year where we are going to use that. But I see the potential here because still a lot is done in a certain way, quite manually, in preparing the comparison. It's not to do the comparison. The comparisons will not be automated, but the preparation of the comparisons can be quite speed up. And the last one is leveraging external data. So in Turkey, we benefit from the great data set from the Insurance Association. That is one. Regulation landscape as well. That is another one. In Turkey, we need to understand, of course, construction costs, ethics, inflations, all these things, how this external data can be leveraged through AI for our understanding. So that is things that currently what you're using. So right now, I would not say it's changed what is underwriting, but it's how we are moving through it through the different steps of the process. And I have to admit, we are still figuring out what are the best use cases. But in the future, and I don't think it's such a far future, all these use cases are going to be, I would say, established and confirmed through the different parts of the organizations, where we'll say, this tool is actually quite useful in terms of productivity gain to compare the submissions. And at the end of the day, all these use cases are going to be put into one ecosystem, which is an agent, which, if you want, is an underwriting assistant, if you take the Lloyd's of London structure, where you will be able to interact in terms of engaging with it, in terms of understanding a little bit where you are in the submissions. Potentially, you could already proactively respond to the brokers in checking, the submissions and what is missing. So you have things which is done automatically, checking how the treaty that you're receiving is matching versus your guidelines, checking the claims, so how the claims of the client is moving, but as well, how is it moving versus the market. So all these things, you could have it centralized in one place, which is the interface for the underwriter to go through the submissions, but as well interact with the data of the firm, of the reinsurer or the insurer, in terms of understanding where we are in the process, in terms of claims payment, in terms of payment of premium. So we see quite a benefit here to go to that level in terms of the underwriting. But there are some food for thought here. And the first one is, as mentioned, data is at the cornerstone. So building AI, just to build AI, is going to be quite challenging because at the end of the day, we need to think about problems we need to solve for our clients, or through our value chain, what is quite heavy, intense in terms of hours or people, and how we can do it better and faster. For us to have our staff and our people focusing on what has the biggest value for our clients, but as well for the shareholders in terms of the underwriting. So data will be at the cornerstone of the data strategy. It's not going to be a transformation overnight. It's going to take a certain time, and it's going to come with a lot of trial and error. And we need to be aware of the balance in terms of usage. So right now, if you work with this tool, it still requires a lot of work to get a result that you're happy with in terms of quality of the output. And you need to think how repetitive this task is. Because sometimes, if the task is not repetitive, it's just a one-off assessment, you're going to spend maybe 1-2 hours is prompting when you could have done the job in 30 minutes. However, spending 2 hours of doing a proper prompt on something where you are going to repeat on a quarterly basis and that other colleagues within your firms can leverage, I can see the business case here in terms of return of your time that you're spending on it. But we need to be careful as well, because already medical research are showing that people using AI, solving problems, are using less their brain than people trying to solve a problem without the help of AI. And personally, I went through this pitfall, trying to use AI to find the solutions, whereas AI here is a tool for me to, where I've structured my thoughts around how I can get to the answer, and AI will run specific assessment that I want to do in order to reach the conclusions. And the challenge is if you basically think AI will find the solutions, you are not actually engaging with the content. And you can realize yourself that you spent 5 hours prompting, you didn't retain anything about the content. Whereas you could have taken a piece of paper, summarizing your understanding of the problem, listing the analysis that you have done, that you need to do, use AI to run this analysis, write down the conclusions, then using AI to make it nicer and a bit more understandable for the audience, and here we are. And you probably have used less time, but you have much better understanding, and you're using AI in a critical way. Because at the end of the day, I see a structural challenge in a sense that, especially, we need to train the next generation of underwriters. And to train the next generation of underwriters, it's extremely important to have this critical thinking, which makes underwriting such an interesting job. But for that, you need to understand underwriting in the analog way, what I call the analog way, the old-fashioned way. Because if you understand the analog way, you can use the tool to do shortcut, but as well challenge the models when it comes to the outcome that you're getting. If you don't do that, you are going to train the next generation of underwriters while lacking this critical thinking. And let's be honest, underwriting is, of course, leveraging the data, but it's as well seeing what you don't see in the data yet. And that's where successful underwriters are, is an anticipating trend based on other factors which are not yet in the submissions. But there are opportunities, with AI. We can transpose the knowledge of really senior people into AI infrastructure to diffuse this within the organization, and to really have potentially bots or AI agents who have this critical thinking that you can use as a sparring partners when you're assessing a risk. Because at the end of the day, we're usually saying 2 underwriters, 2 view on the risk. So this critical thinking can be enhanced with AI. But I think what makes the beauty of underwriting is insurance and reinsurance, and that's probably the reasons why we don't have yet trading algorithm in our industry versus the banking sector, is the fact that the human touch and the human spark is really key in the underwriting and in the process, in terms of understanding the risk, but as well the people interactions. It's still quite a big people industry that an AI cannot replace that. So I think in conclusion, I would say, I cannot tell you whether it will replace, but right now, I see it more as an enhancer of the underwriting human spark. So thanks a lot for your attention, and look forward to the panel conversation.
Arnaud, thank you very much. Before we move to the next panelist, I would like to ask you, obviously this is a journey, and I was wondering, is there a risk at some point where it becomes difficult to communicate what an AI model gives you to your clients?
Can you just repeat the question? I just didn't hear.
Yeah, I was saying that, do you think there is a risk of some point becoming difficult to explain to your clients what the AI model is providing you, therefore explaining your underwriting decision?
Yeah. So I think there is definitely this risk. I mean, if you don't understand how the model is working and understanding the analog skills, you have the risk that you're going to present something, and not only us. I mean, the main counterpart from a modeling perspective are the brokers, which are going to come to clients about their views on the risk and then have an exchange with the reinsurers. So I think it's critical that we still get in control of this understanding of what is driving the results, and AI is a way to run things that we couldn't do in the past, run faster things, leverage a new set of data to see the correlations. But if you just say, here we are, that's the result, and you cannot argue about it, there is a question about what is the value that you are adding. And for us, basically, we're going to go to shareholders explaining, yeah, that's what the model is saying, but, but I mean, an experienced underwriter would say a model by nature is wrong. It's just an opinion. Yeah. So I think it's intrinsically in our interest to understand what we are doing for the good of our clients, for the good of, I think, the society, because I think our industry plays a key role for the society in terms of resilience, and as well in terms of our shareholders.
Okay. Thank you very much.
Thanks.
Our next panelist is Mark Booker. He is member of SCORE, Board of Directors, and Market Manager for Southern Mediterranean and North Africa and Francophone Africa. He joined SCORE in 2002 and has experience in PNC in the Middle East and South Africa. And here comes the interesting bit for me. In 1992, he pioneered the establishment of the first national private radio station in Turkey and became director and shareholder for the first foreign radio group investment in the country. Mark is also the president of the main Paris-based NGO, working on bilateral relations between Turkey and France. And he is the president of the association that brings together all graduates of Francophone schools in Turkey. So with that, very interesting bio. Mark, I would like you to give us the perspective of SCORE.
With pleasure, Vasilis. Many thanks to you, Kalimera, and hello to everyone. That was our panelists' general opinion that Insurance Summit was a great one. So, Vasilis, if I may, in your name, would like to thank the Insurance Association of Turkey, Uğur Bey, Özgür Bey, STD with Fahri Bey, Ahmet Bey as well, Özgür Bey, and Menekşe, who must be in the room somewhere, together with Hulki Bey, who is always there operating. We have coordinated together with my good colleague Arnaud on the presentations, just to make it more readable for you. I'll try to brief in some slides of what we do in SCORE, and then at the end I'd like to show you a very brief demo of an of an AI tool we have, especially on the medical underwriting. But before going there and showing you the slides, I would like to continue what Arnaud was telling you, is that there is a meaning of what we do. I mean, there is a reason why we are here, and there is a reason of our being, a raison d'être, as we say in French, and I believe it's the same in English, which is we protect societies, we protect people, and that is the most important, and that is why we have a duty of manipulating with responsibility all the AI tools. That is very important. And as well, we need a human touch as an underwriter, and especially as a treaty underwriter, because we have to have that feel with the brokers, with the clients. And there is an idea of a meaning where AI do not has that. There is no intuition in AI. Whereas in underwriting, and especially in treaty underwriting, there's a continuum. There's a narrative. AI doesn't make you any narrative. If there is something of a serendipity, it will throw it away. It's an outlier. Whereas a serendipity for us, well, it's a mutlu tesadüf, as we say in Turkish. It's a luck. So we can build on it, and that is very, very important. So let's never forget that human touch. So with this, I will show you some slides. Thank you very much. So I told you he was a very good colleague. So. I appreciate that that mustn't be your immediate concern today, the AI. I mean, in that pre-renewal period. But nevertheless, I'll try to give you what you think at SCORE about what we do on AI. At the beginning, as an underwriter, I would like to know what AI brings me. How am I taking advantage? Am I struggling to try to operate different tools? Because I have at my disposal, let's say, a regular treaty underwriter, a pricing tool, which I operate or our actuary operates regarding our pricing guidelines. I have an accumulation tool so that I can see daily what kind of capacity I am using. I have the state of accounts, all the account statements from the cedents. I have all the stats provided by the client or by the broker. I have a claims tool so that I can see all the claims which are open, which are on which they are maybe pending issues, some IBNRs. And there are also treaty wordings so that I see if all these wordings are in comparison with the others in the market, are having all the clauses requested by my underwriting guidelines and the market practice. So imagine all these tools in a dashboard, and the role of AI basically is for a pilot, as I am as an underwriter, to give me in a cockpit all the signals that I want to have for the renewal. Generative AI. So we talk about the AI, which is not only reading, but also producing text and some ways to go forwards. Generative AI offers a broad spectrum of applications across the insurance value chain, from risk assessment to the customer engagement. It can analyze diverse textual data sources to identify emerging risks, monitor regulatory changes, and extract insights from customer feedback. Additionally, AI enhances customer support and claim processing by automating routine tasks and improving accuracy. So this slide provides deeper dive into policy recommendation, document analysis, and underwriting, highlighting where AI can add the most value in tailoring products and streamlining operations. And here you see all the fields that AI may have an additional value, starting from customer support. You may have seen at a data center, when a call center, when you call a robot, or all the claim processing with all the readings of the AI and giving us feedbacks and the policy comparison and so on. Underwriting has evolved through 4 key technological generations. Initially, decisions were rule-based, using underwriting rules engines. Predictive models then enhanced the risk assessment by leveraging data patterns. The 3rd generation introduced AI to augment underwriting by extracting insights from case summaries, improving decision quality. The current and future generation focuses on sophisticated AI-driven decision-making that integrates evidence-based models while emphasizing explainability and transparency. This ensures AI supports underwriter as a reliable second opinion without replacing a human judgment. That could be a second opinion, that could be an assistant, that could be a chief of staff, as you prefer. This slide presents survey data reflecting how the Lloyd's market is adopting enhanced underwriting technology, in continuation of what Charles was saying earlier today. Augmented underwriting shows significant experimentation and strategic foundation stages, while pure algorithmic underwriting and digital broker facilities are also gaining traction. Notably, active portfolio trackers have a high percentage in scaled execution, indicating maturity in that area. These insights reveal a market in transition, balancing innovation with practical deployment challenges and underscore the importance of continuous adaptation to maintain competitive advantage. So in-house, we are actively integrating AI across multiple operational areas to build the reinsurer of tomorrow. AI applications scan pricing, claims management, and underwriting, enhancing productivity by enabling faster screening and better risk selection, effectively doubling efficiency. These capabilities are not only deployed internally, but also offered to clients via our platforms. The slide highlights a strong focus on accuracy, nearing 90%, and emphasizes that all initiatives are progressing rapidly as part of SCOR's strategic plan. I'll make a showcase of the AI assistant just a minute after this. So this slide illustrates that the simplified medical underwriting journey. So we'll be talking about P&C, but all that you have seen are completely declinable on P&C or life and health side. And we take the example of medical underwriting because of the data and how much data is on the medical. That illustrates the simplified medical underwriting journey, emphasizing the importance of structured data in decision making. Additional information required for underwriting can be unstructured, like handwritten notes, or structured, such as database entries. The process relies on medical underwriting and claims rules or algorithms to analyze this data and reach a decision. The distinction between Gen 1 and Gen 2 reflects the evolution from basic rule-based systems to more advanced algorithmic approaches, highlighting the ongoing shift towards data-driven underwriting. Here we see the progression of the medical underwriting journey enhanced by generative AI. Gen AI addresses key pain points by streamlining data collection and augmenting underwriter roles. The flowchart shows how unstructured and structured data feed into increasingly sophisticated generations of underwriting algorithms, culminating in Gen 4, where AI supports automated or supervised decisions. This evolution reflects a move towards greater automation and efficiency, while maintaining human oversight to ensure accuracy and reliability in underwriting outcomes. So this is the underwriter assistant I would like to show you. This is a significant advancement in underwriting and claims processing. It delivers high accuracy, around 90%, and is expected to improve efficiency by over 50%, enabling faster case handling and expedited rejections. The system ensures consistent underwriting decisions through explainable and reliable AI, with us assuming liability for any errors, demonstrating confidence in the technology. This solution not only benefits clients, but also enhances the end customer experience by speeding up processes and maintaining high standards of risk assessment. So let's go on that AI. You will have a short video on which I will try. Okay, so we can go at the beginning, Hulki Bey, if possible. So this is the. We can stop at the first. Yeah, please. Thank you, Hulki Bey. Okay, so we stop. So here you see a panel where you have a list of risks. So these could be risks of property risks, any plants in different occupancies, in different locations. So this is medical. And here you see at the left-hand side what the AI can do. So we can go over it. So we choose a file, we drop it into the AI, so we upload it. Okay, stop. The screen goes half enough fast than the usual time. So it's very fast. So this is by 0.5 speed, the video you are seeing. So here, the AI has read all the pages. We read 1.5 million pages a month with this. And so we have all the data regarding the person. Then we can go on the next one. So we have different tabs where you have all the details of the person, so all of the risk. And then we can go, and here is interesting, advanced. So if we can move back, please. That is interesting because here is where you can have a chat with the AI, so that you can ask the questions on underwriting and what he sees. What is important here is to see what you have in the file, but also what you don't have in the file. Okay? And after that, we'll try to select an impairment. Stop. We can stop. So we have chosen a risk. We can go back a few seconds, please. Thank you very much. Okay, stop. So here we will look at what kind of disease, or if you would like, in the PNC terminology, what kind of peril that we would like to see, and we would like to have an opinion from the AI. So here we choose sleep apnea, and then we can go. And you will see, you can stop there. And here you see that there is a decision tree. The decision tree comes from our underwriting guidelines. And so it says yes and no. If it says no, so there is a rejection, and it gives you the reason for it. And at the end, it will suggest you an underwriting decision. But at the end, it's the underwriter deciding. That's it. The most important is that the last word comes to the underwriter. Thank you very much.
Thank you very much, Mark. Just a couple of things. It's interesting you are the first one who's touching on life and medical underwriting and so on. And I would have thought that this is fertile ground because of the massive data that exists out there. Why do you think we hear less about life and AI? Is it because we are focusing on big claims, or because we are more focused on PNC? What's your view?
It's, I believe, because of the data. I mean, the system is the same, right? So you apply it to some data. It could be to risk surveys, for instance. We do have many on treaty underwriting, or especially on facultative underwriting. So we can put our system on it as well. But on the medical, you have thousands, tens of thousands of data. So it made more sense for us to start it from the medical underwriting. And, well, it works. As I said, there is still 10% to correct, because the system, the AI assistant, still gives you the possibility to check if the decision was based on data which is wrong, and if the data was already there or was missing. So that is very important. But we could apply it on PNC or any other type of data. The most important is the process, is the AI process.
Okay. And another thing, you touched on the point that you see both accuracy improvement and efficiency improvements. Would you say one is more important for your company than the other, or they're both equally important?
Well, the accuracy is about data, right? And as Arnaud was saying, the most important is that we feed the system with corrected, clean data. That is very important. So the accuracy will come from this data or not. So if the data you are putting is not good, at the end, the result you'll be having will not be good. That is why there must be a foundation in any company putting AI tools on their data. They have to check the data. We call it the foundation and the source of truth, if you would like. So that is very important. And then the decision again, still in that phase in 2025 September, we have still to correct it, to adapt it as well, and to verify it as well. But if you ask me the question in 2 years' time, maybe the response will be different because we will be completely confident in our systems. Okay. We'll see.
Thank you very much.
Thank you.
Next panelist we are moving now is Christian Mangold. He is Regional Director, EMEA, for Munich Re Parametric NatCat. He is an experienced expert in parametric insurance and structured reinsurance. He leads the parametric NatCat effort for EMEA. Started his career in consulting before joining AXA in Paris, working on climate risk solutions. He holds the double master's degree in international business and politics in international management from Copenhagen Business School and Tsinghua University in Beijing. So off you go, Christian, to tell us about how AI helps the parametric models of Munich Re.
Thank you very much, and you reminded me of the student years, so those are good memories. Thank you very much. I think after presenting, an overarching picture of how reinsurers use AI, I would like to deep dive a little bit and show you how we use it at Munich Re. I think also at Munich Re, there is a wider strategy on how we use AI. Each department, the claims department, each business unit, and each team can define it for themselves. I think most importantly, it has to work. And if I may touch upon your last comments for both of you, for us, the most important thing is to create working products. I think if we are not using AI to achieve something meaningful, it doesn't make any sense. I have to see how I move forward. Data input, I think, is one of the most important things. And secondly, modeling. And if you look at NatCat risks and climate risks, the most important thing is to understand the underlying risk. And secondly, to create a product that corresponds to that risk. I think from the parametric perspective, that's always the most important thing, to look at single perils or then combine them and make sure that the products work. What we have here is something that we have at Munich Re, and it's available to our insurance clients. It's a risk mapper tool where you can give in the lat long of each location, either of a full portfolio, of single elements of a portfolio, and you can see the risk exposure. I think this is very interesting to see. So here, if you would zoom in on those small pictures, that's Hagia Sophia that I chose. And I tried to see what is actually the earthquake exposure of that location. And it will give you very precisely the peak ground acceleration of that specific location. And after that, finding an insurance cover on a parametric basis that corresponds to that location is not that hard anymore. And what is interesting here, so we don't have a lot of flood around Hagia Sophia, but if you choose another location, and you ask the tool, what is the current flood risk, it will give you a flood map around that specific location. After that, you can ask it, what will be the flood risk in 10 years, in 20 years, in 50 years? And you can also ask the tool, what will be the flood exposure on the different climate scenarios? So you see, with the different, we can add layers and make it more and more complex. So the questions we ask become more complex and difficult, and also the answers that we can get out of the tool and out of the tools that we use become more and more complex. And many of these tools and underlying data sorting and so on are AI-driven. So what I show you here is a combination of different kind of AI applications that we use to then create one output. And at the very end, I will show you one image. I don't have the full demo, but an image of a Gen AI product where we use the input, so I told you the lat long of a location, and then we give the tool the full opportunity to assess the location and give us the appropriate cover. So I will just show you an image of that. So I think most importantly, understand, and then we have to measure what is the economic impact on that specific location, and then we have to manage the risk, and of course there are different ways to manage risks. One element is insurance. Maybe I shouldn't say that, I should say most important is insurance, but one element is insurance, and finding the right cover from our perspective is important. And if you scan that QR code, you will be able to see how that tool works. And of course, when we talk about these type of covers, we talk about single risks. So single perils, single risks. And for that, very appropriate is also something that is called parametric insurance. And I think we heard a little bit about cat bonds and the financial markets confidence in cat bonds. And what we also see more and more, that if cat bonds are structured on a parametric basis, or the underlying structure is parametric, then also the financial investors' confidence in these products are higher and higher, because it's very transparent. So the underlying idea is that we have a triggering event. When that event occurs, there is a payout. And you can see that if the product is simple, and I make it more simple than it is, of course, all these steps are complex and take a little bit of time. But in essence, it's a simple product. And if you want to have that, it also means that it's transparent. And with the transparency, it provides the confidence, I think, both for clients, very end clients, but also insurance clients purchasing these products. And ultimately, you agree on a trigger, and I think most common knowledge is magnitude, that we heard about it in school, and that's what you see in the news on a day-to-day basis. So if there's a magnitude X, for example, 7, along the Marmara Fault, then there is a payout. And I think this underlying principle and concept is sort of the simplicity of these parametric products. I think, and I think here I make the argument again that there are a few drivers behind these products. So first of all, there is the simplicity. Again, you only need the location of the client, and with the existing clients, you can existing models and existing tools, you can already model the exposure and find the appropriate cover. Secondly, it closes the gap of existing covers, so we don't really differentiate between deductibles and whether it sits in an aggregate part of the treaty program even. It doesn't really matter, because it's closing exactly the gaps that are caused by single perils. And it's very interesting, we have the conversation with some insurers, and we look at the full portfolio, and they tell us that, well, actually, when I look at my losses at the end of the year, X percentage is coming from flood. So I want to get rid of my flood exposure in my overall portfolio. And I think that's where we try to see if it's possible to, first of all, understand that risk, model it, and then take it out of the cover on a parametric basis. And whether you then place it as an insurance cover, an ILS or cat bond, I think is the second question to that. But I think the underlying structure is still parametric. Transparency, and I think that's really one of the main drivers. So the data input that we're using, and the tool, if you scan the QR code and if you look through that, most of that data is coming from publicly available sources. And I think that's really one of the beauties of these products, that there is no big discussions on what the data source for that data is. So it's USGS, often for earthquake covers, or different kinds of satellite sources, so GPM data coming from NASA, so we have different grids, different granularity of these data sources depending on the cover, but overall they're always public sources. With that, everyone can see what the input of the data is, and I very much agree with data input, so the data quality has to be good, and we have to understand what the underlying data is, because if we put data into the tool which is not worth a lot, then the output will also not be worth a lot. And then obviously, if you have all that, then you can settle very quickly. So there are not many discussions. There's no claims assessment. Also here, I think one of the interesting discussions I always have in Turkey is inflation doesn't play a role in these kind of covers, because you agree on the certain amount at the inception of the policy, and you get exactly that amount if there is an event occurring. And I think liquidity and using this as an additional financial instrument is becoming more and more relevant, not just in Turkey, but around the world we see these covers. Just to give you a glimpse of what kind of perils are currently covered on a parametric basis, so it's becoming more and more, and I would say if you look from the left to the right side, then it's increasing the complexity and also the difficulty of modeling these covers, but earthquake, and if you look at one of the charts we saw earlier today on the specific perils that are causing large losses around the world, I think obviously the insurance industry has also adapted to that, and we are trying to cover the main perils or the main driver of losses on a standardized basis. And I would say until the middle of the screen, so earthquake and TC, hurricane or typhoon, is very standardized by now. those products have been around for at least 10, 15 years, and as we move to other flood events and extreme weather events, that becomes a little bit more difficult because there we have trends, and that's also the climate change effect that we have on some of these perils, that there's not always clear consensus about how that will influence these perils, but we see some trends that we have to take into consideration, especially when we are planning these programs. But just to give you a picture that this is already available today, and obviously some of these are more and less relevant in different regions around the world. So this is a glimpse of how it then looks, and exactly the kind of data extraction. So normally, I would take an email or a submission, an Excel sheet, and I would extract the data I need to insert into my tool to then get an output. And the output I would create would probably be something that you see on the left side. This is a so-called cat-in-a-box catastrophe in a box structure, and which has been around in the parametric and also in the cat bond market for a few decades. And there are a few flaws to this product. There is some basis risk. What if, so the idea is that if there's an earthquake within that circle above a certain magnitude, there is an automatic payout. Now, the problem could be that if the earthquake occurs just a little bit outside that circle, the product wouldn't pay. So we have a big, big problem there, that we have an event which causes losses, but there's no payment registered according to the agreement or the policy. And I think what you see on the right side is then the output of one of these Gen AI tools that we have. And here you do nothing else than you tell it, read this email, and it will think about 20 minutes currently. It will probably get quicker, and it will give you a much more sophisticated structure with a much more sophisticated and precise output. And what we see on the right side is I think, based on PGA, so peak ground acceleration, which takes each let long of the portfolio and assigns a certain value to it, so it's a total sum insured or TIV for each location, and then designs a product which is in equilibrium with the pricing of Munich Re, so the expected loss, the price, and the risk at the location. So you have the optimal output, and the Gen AI in this case can very precisely tell you this is a better structure. Now, and just to make a last comment, so I think the idea is to create products that work. And I agree, someone has to look at it at the end. So I don't think we would be confident to sign anything that comes out of this tool, but I think what today I would like to do is to give you a glimpse of showing you that, first of all, there is AI used in specific parts of the underwriting process, used in different modeling parts, also to extract simple data from emails, just put it in a certain format, and then all the way to more and more complex structures, from extracting the data and creating an optimal solution, which also takes into consideration the stochastic model of Munich Re for earthquake. So that's pretty much in a sense. I hope I could give you a picture of where we stand today, and of course we are very excited, and I think one of the discussion points also touched upon is where will it go? Will it be agentic AI with a central agent controlling all the other agents, telling it what to do, or what is the path that will end up with? I don't know, but I think it's quite exciting, and especially when we see that there is a real-life application to it. It's not a theoretical exercise. It's something that we use on a day-to-day basis, and that supports us in our work. Thank you.
Thank you very much, Christian. Thank you. I will ask my questions that I have to you later. So we'll move to Stavros Dimopoulos, who's the Vice President for the Federation of European Damage Adjusters.
Thank you.
He's the former president of FEDI and now serves as the vice president. He graduated as a topographer in 1997 from the Athens University, where he completed also his first master's in GPS. In 2000, he became one of the first Greek loss adjusters to have been certified. He completed his MBA following that, and a few years later, he got his third master in cyber and information security. He has 20 years experience of actively involved in over 10,000 claims. So with that as an introduction, Stavros, I would like you to give us the view of a loss adjuster.
Thank you. Once upon a time, there was a little boy named Stavros. At the sensitive age of 6 years old, Stavros found himself in a situation that most children of his age would like to bury deep in the edges of their mind. Indeed, he found himself in a burned-down factory. The roof had collapsed. Sharp pieces of broken glasses were scattered all over the floor. There was a nasty smell of burned steel and plastic. It was a really disaster. However, little Stavros was not alone there. He was accompanied by his father. His father was a loss adjuster and a claims expert. He has been appointed by the insurance company to investigate the loss and assess the damages. Stavros' images are quite vague, but he can clearly remember his father digging behind the debris of a shoe machine and picking up something that looked like his laces. He was scratching his chin, really problematic. Later on, Stavros understood that these laces are called wiring or cables. Anyway, that was the moment where the seed had planted. Later on, when Stavros had fulfilled his university and was exploring his career prospects, his heart spoke. He wanted to become a loss adjuster. Today, Stavros is in his 50s, and we asked him how he feels about being a loss adjuster. His response came without the slightest hesitation. I am the luckiest person on earth. And why is that, please? I'll tell you why. We assist people and households recover after a loss. We assist businesses continue their activity after the loss. We save jobs. We manage to recover businesses and people. Isn't this the most moral reward anyone would like to have in their job? This is actually what a loss adjuster does. Does a loss adjuster provide claims experience? I don't know, I thought loss adjusters were cruel people with no empathy, that were following strict rules of the insurers, just giving numbers and providing some figures for indemnity. That's true. I'm not stupid. I can be sentimental many times. I can tell you this. The insurance training and experience is perhaps the core competence for claims resolution. However, empathy is the soft skill that creates a customer experience. What I've said has reflected on the past. What do you think will happen in the future? Is loss adjusting going to exist in 10 years' time? 20 years' time, perhaps? Is artificial intelligence going to replace all of us, the claim departments? Has anyone heard about lemonade insurance? Anyone? Lemonade insurance? Yeah. No, feel free if somebody has raised your hand. Never mind. Lemonade Insurance is a fintech insurance company. And you know what world record does Lemonade hold? The fastest claims settlement. And you know what this record is? 3 seconds. 3 seconds, ladies and gentlemen. the fastest world record in claims resolution. When the claim was submitted by an artificial intelligence agent through the mobile app, 3 seconds later, a remittance to the bank account of the policyholder was executed and the money was paid. Now, this is mind-blowing, but what if I could tell you we can beat this record? We can be even faster. How? I will tell you how. We have geoinformatics that provide us very good data with sum insured type of risks in a certain area on the map. In parallel, we have forecast models that tell us about the weather, and with very good accuracy, we can predict when a storm or a flood or a wildfire will hit a certain area. Combining these two models, we were able to predict not only which area will be affected, but what the cost will be. We have the sum insured, we have the prediction, the forecast, and we know in advance that if a flood happens 2 days later, that would be the cost. So when it starts raining, what could be simpler? 10 minutes just before the rainwater penetrates the facility, we know it's going to be damaged. So the customer experience would say, OK, 10 minutes before the damage, let's remittance the money to the insured and pay the indemnity in advance. And if, hopefully, the last minute the wind blows in the other direction, the bank will give us the advantage to recall the remittance if, hopefully, there is no damage. So the moral of the story is that there is technology, there are a lot of potentials, but we need to be conscious how we use it and how we manage to deploy it in everyday life. But loss adjusters are not only about customer experience. We are also a shield for reserving and insurance purposes. Insurers are required by the supervising authorities to keep reserves. These reserves are not a figure of an artificial intelligence tool. I refer to the non-life business. These figures are created by loss adjusters who have visited the ground and made a prediction on the amount of loss and what they expect about the loss to be paid. So there is an added value in the industry of the presence of the loss adjusters, of the human beings. And apart from that, there are other values that we offer to the industry as human beings and not as technologies. Sometimes claims go south, and the institutions of customer protection step in to identify what has happened. We provide to the insurance industry the shield that they can tell we have appointed the best certified professionals that are available to resolve your claim. We took care of the customer rights. We didn't do something outside the manual. Apart from that, nowadays, most commercial claims are handled by risk managers. Risk managers are certified professionals as well. So when they deal with a claim, they would like that certified loss adjusters are appointed as well. I don't want to chatter anymore and provide you other examples. I'm a fan of technology. We see that technology is changing our lives. Nonetheless, we need to be conscious that what will drive the future is the combination of common sense and technology. Loss adjusters are in a position that can become strategic partners of the insurance industry and assist in choosing the best way for deploying technology and the best way that technology will assist and provide the results we want. Thank you very much for your attention.
Thank you. Thank you, Stavros. The last but not least member of our panel is Neslihan Nesiboglu, who's the CEO of Neova Sigorta. She's been heading the company since 2022, and she's also a board member of the Insurance Association of Turkey. She started her professional career at Kuwait Turk Participation Bank in 2005, where she held various senior positions. She's a graduate of Middle East Technical University's Faculty of Business Administration and brings 20 years of experience in banking, risk management, finance, and insurance to her current position.
Yeah.
So, Neslihan,
thank you.
please lead us through the activities of your company in digitalization and cyber risk.
Thank you. Thank you. Good afternoon. It's my pleasure to be here because in this panel, I am with very experienced and professional guys in the sector. As Vasilis said, I joined the insurance sector 3 years ago. I was a banker, and I love it. Why? The first reason is that I mentioned in my presentation, the insurance sector is very comprehensive, and you can touch every detail for human beings and all the investments and economies. For example, for cyber, my friends talk about AI. The technology evolves very fast, we know that. And, for example, cyber, and yesterday we have seen that in the world, the cyber security, the cyber is a kind of risk. It is in the first rank. Unfortunately, it is the last in Turkey, but I believe that it started to, get awareness. So I mean that, for example, cyber security is a very special technical issue. I'm not an engineer. I have graduated from business administration. My background is coming from the bank, finance, risk, etc. But however, how can I describe? The insurance is something like that. You can combine every detail together and you can create the insurance product. It's very, very dynamic. For that reason, I loved it. So, for example, my engineers in Neova Insurance is here. It's a very technical issue, but we have created the cyber. This is very exciting. So before my presentation, I want to highlight some issues about cyber, because we have two hats. One of them is, actually, I am trying to manage my company, and so for that reason, also, as an insurance companies or reinsurance companies or the banks, whatever it is, of course, we have some issues about cyber. So we have to build our defense. On the other side, we are an insurance company, so we can solve problems for insurance, for the cyber attacks, because my friends said that, and also yesterday there were good panels. We are talking about AI. So we will have some results of those kind of actually developments. Cyber attacks is not rare anymore, unfortunately. For example, each and every 39 seconds, there are cyber attacks actually. For example, most probably now, before I finish my speech, there will be many cyber attacks in the world. Fortunately, most of them are not successful. It's good, but we have to build our defense systems as if it will be successful. The second one is that it doesn't matter the cyber attackers are creative or not. For example, if we don't build our defense system, if they are weak, unfortunately, if the cyber attack is not based on AI, it doesn't matter. If it is not, uncreative, we will have huge damage as our companies. So the third one is that cyber security is not just the responsibility of the top managers or the shareholders. All the middle managers, all the staff should be responsible about cyber security. It is very, very important. And the last one is that because of AI, it is very difficult to differentiate whether this is real or not. For example, if I send an email to my staff in Neova, for example, it is very, very difficult to differentiate whether this mail is coming from Neslihan or not. So for that reason, all the companies should increase the awareness of the staff. This is very important for deepfakes and phishing techniques, etc. And the last one is, this was the last one, but I want to mention another thing, that the cryptocurrencies. You see, in the past, especially, the ransomware, especially the attackers, were getting payments by bank transfer or in cash. But these were very, it was very easy to trace those kind of things. However, unfortunately, now, there is a parallel way between those two things. They can get their payments by cryptocurrencies, especially Bitcoin, etc. For that reason, it has been very difficult to trace those kind of attackers. So as a result, whether it doesn't mean that, like an earthquake actually, all our companies have not any, for example, cyber attack today, up to today, but it doesn't mean that tomorrow we will not have. So for that reason, we have to build our defenses. So as a result, when I look at those kind of analysis, I think that as a person, insurance is very important, and because the companies should continue to invest technology, and they will, get insurance products in those to mitigate the risk, especially in cyber. So I will try to explain what is cybersecurity, especially for products. I know that in the world, it evolves very fast. As Neova Insurance, we have started a new product. For that reason, I will try to explain what is the competitive advantage of that product. So cybersecurity, firstly, global risk and statistics I want to mention. As I said, AI-based cyber attacks, ransomware, it is one of the things that we have to deal with, those kind of risks. Third-party risks, it is very important because of the globalization, the integration, we are working with third parties, especially in insurance sector and most of the sectors. For that reason, this is another risk. Advanced social engineering and, of course, the quantum. For example, last month, I tried to understand what that quantum is. Thanks to my friends, they worked and we discussed the issue. And after one day, actually, I was very tired, to get those details. I don't say that I understand very clearly. I try to understand more because it is very strange. If, for example, in if countries just quantum computers are being invested, but I cannot imagine whether if it is, diversified in the world, we will see what will happen. So, as a result, cybersecurity is one of the top challenge and top risk in the world. For example, 85% of all the organizations are planned to increase their budget about the investment of cyber. This is important. And also, the total cost by the end of 2025 most probably will reach more than $10 trillion. It is very huge comparing to the budgets of the companies. And the ransomware, each payment has reached $2 million at least from the attackers. And unfortunately, this is the worst result of cyber attack. 33% of the businesses lose their customers. Maybe you can compensate the other cost, but it is very difficult to compensate the lost customers to gain again, actually. And 66% of the organizations expect AI to impact cybersecurity. So at the end, I try to explain that this is very interesting and very generic, you know. For example, we are investing cyber, but the attackers also investing cyber. We are capable of cybersecurity defense. Also, they are very capable of AI-based attackers. So for that reason, it means that AI are being used by ourselves, you know, the defenders, to detect the phishing, fraud, and automated. And actually, on the other side, the cyber attackers are creating. They are creating, we are detecting. Actually, all of them the same. They are creating and we are detecting each second, actually. We cannot, and for example, some risk or AI and others have some duration, you know, starting point and end point. However, cybersecurity don't have any, you know, the duration. It goes every time because you cannot stop each second in a day because we don't know the exact time. So the cybersecurity insurance, yesterday also, most of the panelists said the same thing. Insurance is, as you know, risk transfer, but the paradigm is being actually changing. You know, the risk transfer is going to the risk management, risk partnership with the customers, because we have to reduce the risk together. And for that reason, if we have any chance, we have to support our customers. Cyber insurance, in general, what provides that cyber insurance? To cover the cost of the cyber attack. And sometimes 2 or 3 days, sometimes 1 week, the companies have to stop their business. For that reason, the interruption and incident response support. Reputation is very important. You have to declare all the, for example, the televisions or the, you know, the other things. You have to declare something, and for that reason, you have to increase your reputation again. And the compliance and legal issues and penalties, for that reason, motivationally, you will lose. And on the other side, you will lose money. On the other side, you will lose your customers altogether. For that reason, the insurance is coming to help people in that case. The global market size, the premiums, I mean gross premiums, as you see, it is increasing, and yearly at least 15 to 20%, the total gross premium is increasing, especially in US. We know that the market is there. And at the end of 2032, it is being expected to close to $100 billion gross premiums in that sense. What's happening in cybersecurity in Turkey? Of course, we are doing, and we have started to do something. Firstly, this is important. In March 2025, there is a cybersecurity law. It is very important. We know that in many countries there are regulations about cyber, but in Turkey, this regulation, this law is very comprehensive, very, very comprehensive. For example, it determines all the politics and the requirements of the customers. I mean SMEs, corporates, commercials, banks, everyone actually in the market. And also covers all the companies, as I said, public institutions, their tasks, their politics, regulations, sub-regulations, and also cybersecurity presidency established by this law. So we will see their task and their duties in the near future. This is an important point for cybersecurity. And when I heard about that, I have been very happy because my friends actually informed me about the education side. This is very important, we know that. For example, when I was a student in ODTÜ, there was not any field, but I have heard that, for example, in Kıbrıs campus, there is cyber engineering faculty. It is very important. And also we know that there are many master programs in Turkey anymore, and also engineering programs, technician program, and I'm very happy to say that there are 8 high schools, cyber high schools in Turkey. It is very important. When you are, imagine that you are a high school student and the school is cyber security school. It is very important for Turkey, I mean. So I want to mention about technology at Neo Insurance Company. We see that we are trying to invest the technology side, and also we have been the first insurance company who have been accepted in Technopark. So we have 5 AI-based R&D projects nowadays. But when we come to especially the cyber side, AI-based cyber security product is very important, and we are nowadays coding that. And we have special cyber security engineers. They are working with us. And also approximately 100 high-skilled engineers in Technopark. And cybersecurity awareness is very important, internally and externally. We actually feel our responsibility on our shoulders. For that reason, we try to make training to our staff and also to our agencies, our partners in Technopark office, for example, especially in cybersecurity education. And also, this is I'm very happy to share it with you. As I said, there are cyber high schools in Turkey. One of them, and the first one is in Technopark High School, Cyber High School. And we have constructed a mentorship with Cyber Security High School together. And these teenagers are coming to our offices, and they are our interns, especially in cyber. They are trying to learn how to detect those kind of actual attacks. As a result, technology is going fast, and we are trying to running behind that technology. And also, there are very, very important, the results of those kind of cyber attacks because of those technology. We, as Neo Insurance, we have been the reinsurance, of the Lloyd's syndicates at the beginning of this year. And providing the capacity from Lloyd's syndicates, we have launched our Neo Cyber product. But this is a general product. You can find this kind of product in everywhere. But the competitive advantage and the differentiates of that product is that because of our Technopark cyber security engineers, we are managing the cyber claims internally. This is very important because we know how to solve those kind of attacks. For that reason, we are making our claims management internally. And the second and important thing is that in my banking career, I had a chance to see many customers and SMEs in Turkey. They are exporters, importers, they know everything. They are very successful, by the way. But especially in cyber, they don't have enough knowledge. For that reason, we have decided to give consultancy. If an SME or corporate company buys policy, cyber policy from Neo Insurance, then immediately we will have a consultancy by our cyber engineers to those kind of customers to, inform them their, actually, for example, they don't have enough capacities, they don't have enough firewalls, etc., etc., and we are giving a report to them, sometimes face-to-face meetings. This is that, actually, of course, this is a cost for us because we don't get any payments because of that consultancy. This is a responsibility, social responsibility. We are seeing like that. Just policy premiums. We are trying to giving that consultancy and increasing the awareness of the customers and, of course, reducing the risk together by the way, we don't want to get so much claims by this way, actually. So my last thought is that, of course, we will not stop because of cyber attacks. We will not be afraid. And we will focus on rapidly evolving technology. And cyber insurance is there. And cyber insurance in the world will focus on these risks. Thank you.
Thank you very much. So I'm sure there will be a QR code that you can scan and submit your questions soon coming up on the screen. While we are waiting for that, we'll go back to Christian. Christian, parametric modeling. I mean, that was always based on models and scenarios and so on.
Sorry.
How has it moved with AI?
So I think what I try to highlight is that there is no AI solution to everything. I think there are smaller and bigger parts where AI comes into play. And certainly, so first of all, for everywhere, whether that it's an Excel sheet input, we need to structure the data in a certain format. So just having unstructured data, putting it into a structured format, that's one of the very basic tools that we use, and I think that shows that those kind of tasks, I think, have, you mentioned 90% accuracy, yes. I think even higher in some of those cases, really extracting data from submission data and from wordings and putting them into a structured data set, I think that's really where we are quite confident already. And then, of course, it becomes more complex. And as we add more complexity to it, there's also higher risk of failure, higher risk of making some choices in the process that are not human, but that you cannot explain. You were asked, how do you explain the faults in the AI? And I think that's where we have to be cautious. And certainly, I think as long as it's compartments, and we use AI in those compartments and then combine them in a bigger picture, without just having a central agent controlling all those elements, I think there we still have quite good control. And I think that's where we see where it adds a lot of value in terms of efficiency, in terms of also quality, the output is very good. And then, by the way, so when it comes to even the internal Munich Re, NetCat, stochastic model, so our modelers, they use AI to help them in the coding. They don't use the whole coding, but certainly parts of their work is AI supported and driven. So I think to your short question, in pieces and bits, and then putting it into a bigger picture.
Which I think is the same point you were making, Stavros, that there are certain things that will have to continue being dependent on human rather than AI solutions, correct?
Absolutely, yes. Inevitably, technology will be a big part of our everyday business and everyday life. However, let's keep in mind that insurance is about trust and about assisting people. As long as there is no artificial trust, there is always going to be the need of human intervention. So what we need to think is in what areas we want to move with technology and how fast we want to deploy this technology. These are the critical questions, in my humble opinion, that everybody, insurer and broker, and everybody in the insurance industry should ask themselves. Again, how fast and in what areas we want to deploy technology, but let's keep in mind that it's always about human interaction, so at least a very small percentage will be of everyday life would be about a human reaction.
Okay. Neslihan, I was quite interested at the corporate social responsibility linking to cyber risk and also what you do with the schools. how does that play with your workforce? How do they view it? Do they think that it is something different or another corporate activity?
Actually, this is the very difficult point for us because in my career, actually, it is in many times we try to, with my colleagues, launch different things and awareness, you know. And it is taking a bit time for SMEs and the corporate companies to understand, you know, this is very valuable because you see, you are a boss of a company and you will get a report and also face-to-face meeting, whether like a risk, you know, report. It is very important and valuable. They have started to understand what it means. And we believe that product so much with my colleagues for that reason. We will continue to, you know, persuade them to get those kind of reports from us.
Okay, thank you. We actually have quite a few questions from the audience, and I would like to cover them. Sorry, screen went dark. I do remember one, though, that is something I wanted, and it goes directly to Arnaud. On your first slide with the interaction of different departments, what was the red circle? Who is the one who doesn't speak to others?
It's HR.
It's HR.
Because from data protection, there's really sensitive data, and so therefore HR has to be isolated for a certain part of the data set because we have quite sensitive information. But I've had exactly the same questions the first time the slides were presented to me.
I suppose trying to see where we... can AI-powered dynamic insurance models reshape the role of insurers and reinsurers from risk carriers to active risk managers? And also, are we on the verge of AI turning underwriters into mere tool operators? Who would like to pick that up? Don't all rush to it.
I can start. I can give some thoughts. I would say I think we all mentioned the importance of the human interactions in our industry. I think whether it's insurance or whether it's reinsurance industry, as well, if you think as well the brokers, how the human interactions are the cornerstone of it. So, you know, if you think from a technological perspective, trading algorithm is there for quite a long time, and it has revolutionized the banking sector. You know, the fact that it's not applicable now, there are some good reasons about it, and some limitations in terms of data transparency, but as well about this human factor around it. Doesn't mean that we are not going to go in that direction and we cannot get more efficient the way we are doing things, but the way we are interacting, the human interactions really remains at the cornerstone. So I think what an underwriter will be able to do in a day or in a year in terms of output is going to be quite massive now versus before. And I really see that. I mean, what Christian mentioned in terms of how much AI is saving times and work hours in preparing the data, especially for us as reinsurers who work with so many large files, is quite material. So it doesn't change the role and what we are doing, but really how we are doing it and what an underwriter will be able to do, and as well how much information an underwriter will have to integrate in this or her decision making.
Okay. Anybody else? If not, you all mentioned that insurance is still a people's job. Human touch is important. Will we see a time when companies will replace risk assessors or claims handler with AI to a very large extent, with more than 75 to 80%? At the end, it will be cheaper. Will it cause loss of jobs?
Oh, absolutely, yes. I took the initiative. I understand this is addressed to myself. But absolutely makes sense. This will happen. This is happening. The point is that having the interaction with the insured, loss adjusters and claim experts hold the knowledge about how to treat customers. And this is the added value and the powerful tool that makes us the strategic partners of deciding along with insurance company which way we want to go and how fast and which areas we want to deploy technology.
Okay. An observation that comes from the floor is that there was an extensive discussion on artificial intelligence for underwriting and claims, but you see opportunities in the distribution for intermediaries, and how do you think this is playing out?
If you allow me to comment on that, I hope I was able to show a little bit, a glimpse of the way I look at AI. I think it's tools that we place in our colleagues' hands, in our underwriters' hands, and certainly also in our clients' hands, in agents' hands, in brokers' hands. And those tools, we try to develop them first to assist us in our work, in our day-to-day work, but then also to assist our partners in distributing the products that we believe are right in the market and that work. So I think it's along the whole value chain. And some products, some AI-driven tools you can then use everywhere, and others are maybe very restricted to HR or whatever. But just to show you that those tools, I think we would like to give them out. So we are here to develop those tools. I mean, Munich Re is really at the core is P&C underwriting. It's also my colleagues. It's a very strong culture. That's where we find our expertise. That's where we see. That's what we understand. We understand the risks. That's what we talk about every day, not just AI. And that's why we are confident that what we develop is also applicable to our clients. So yes, we are trying to give those tools out and see where it works. So distribution and I think product understanding. There is always, I mean, insurance is difficult. So I think it is our task to design products that work and that are transparent and easy to understand. If I actually have and I recently was traveling and my luggage got lost, and I actually had a claim. It took me 6 weeks to get my claim paid out, and I was quite angry. And I realized when you are on that side of claims assessment, the product just has to work. And I think that's really the thinking that we have. It has to work. And I talked about natural catastrophes. In those scenarios, there is an immense amount also of human suffering after those events, and I think that's when the products just have to work, and working means they have to deliver what they promise.
Okay. I suppose this goes to the first two presenters, Arnaud and Mark. You talked about the importance of AI in capturing and manipulating data, especially for treaty. Do you see this impacting how you interact and the work that is done by intermediaries for reinsurance brokers, of course, for treaty placement?
Thank you. It's a difficult question because it all relates first on the data that we are receiving, right? So be it direct or be it via our friends brokers. So I don't see the main challenge here is the data quality, and Charles talked about the placement at the Lloyd's market. I believe it will have an effect. All what is automatic. I mean, by treaty we should probably look at the different categories. There are facilities, there are facultative placements, so most probably on these structures, the AI or let's say the digital, that's always the trap, right? From which stage you are calling digitalizing AI-assisted underwriting, right? But I mean, maybe on facultative underwriting, I believe as it is costing some time, costing money as well. The premium is much less than on a treaty on the facultative reinsurance, so that may assist much more on facultative underwriting, I believe.
Okay. I will. One more question has to do with, I suppose, with the output of the model, of AI models. And the question is, which concrete measures do you have in place to manage AI model risk? So false model outputs. And I assume, that's linked with another question, which is talking about, do we need to set up AI risk reserves?
AI what?
Risk reserves for AI.
Okay, I will start. So to bring back how we are using it right now. So as I said, it's a lot about data preparations right now. And so that's one thing where there is a lot of scalability and efficiency that can be done in terms of the modeling, and as well the power of calculations, especially with stochastics and in terms of the number of scenarios. Christian was mentoring the PGA in parametric deal. You do a cat in the box. The information that you need are extremely limited. You move to a PGA. You are going to model maybe between 2,000 to 5,000 risks or 10,000 risks if you take for one insurance company, if it's to cover the portfolio. So just that, having an AI would help you to process that. It's already quite mature. When it comes to using AI in terms of challenging, coming with in an autonomous way at the modeling phase, per se, with stochastic, that's already in place to a certain extent. It's just an accelerator. It's not like we are reinventing the wheel. And then it's going to be, reinsurers and I think insurers are quite conservative by nature. So it's going to be, trying to see step by step about how, running in parallel with traditional way, with it more a new way, how the difference of results are, to really understand what the machine is doing. And then it's breaking down the phase of the modeling about where it really adds value, and can be fully automated because the risk of error is extremely small, versus where modeling is just a model. So there are a lot of assumptions, and you could get many results. And by nature, as I mentioned, a model is wrong, and some models are more wrong than others. But it's important as well to think that and I think that's what as well will differentiate some reinsurers to others, and as well the added value of the brokers is to bring this critical thinking into the modeling.
Vasilis, if I may add, the AI is not replacing the tools we are having currently. We are having a wrong debate if we ask the wrong question. The AI, especially the agentic AI, is proactively going and circulating among all our tools, and I completely agree with Arno says, and trying to give the underwriter a synthesis. But that will be much faster than done by another actuary or so. But then reinsurers or insurers will, at a certain stage, will have to make an arbitration between the risks and the cost of gain and time. So that will be an arbitration we'll have to make. So we'll start by taking a risk on a small bulk of business, which is somehow predictable, and so we put our AI engines on that one, and we see what the outcome is, and so there is no much risk, let's say, but there is a cost of efficiency, a gain of time as well. Because we are in a competitive market, right? So, and then it will, with the years, improve and increase this bulk of business.
So if I take that point of improved efficiency, I think it links to another question that's coming up. Is this going to to lead into increased unemployment, or to put it in a different way, less people employed by the same organizations?
It's one of the big questions of this
Yeah.
of this technology coming. I mean, it's been the case in the humankind's history for 2-3 times, where the engine came when the steam came as well, and that will be also the case. But well, please, let's be optimistic. I mean, we are very pessimistic, and we are living in a very pessimistic world, and we have bad news. This is let's take it as an opportunity. New roles will rise, new position will appear, and I believe we'll at the end we'll find the right balance of where to put AI in our lives.
And if I may just comment on that, so there are different dynamics in each country, but it's in Germany, for example, a large part of the currently working population will retire in the next 5 to 10 years. So there's also a huge amount of history or experienced people who will retire, who will disappear from the market. So the ones coming after that generation actually have to have a whole different tool set with them, also being able to use these kind of AI-driven tools. And in addition to that, I'm also optimistic, not just within the company, we have new roles and different roles, but outside. I mean, I think in 5 years, there will be companies that we have never heard about that have a higher valuation than the combined value of the companies we are sitting. So just to say, I think there are many opportunities. We work with many outside companies that are able to scale, deliver, and use these kind of tools in a much more efficient and quicker way. So I'm also optimistic. I think there's good things to come.
Okay. Neslihan, a couple of questions for you. The questions have to do with what you do to protect yourself and your network, if you wish, from cyber attack and leak of data. Someone says, well, obviously the agents are the weak spot in this system, and how do you protect the company and the client's data?
Okay. Actually, the precautions about protecting data and the system solutions are generally the same in Turkey. Most of the companies are investing. And the Neo Insurance is a bit, the more conservative about it, coming especially, it's a subsidiary of a bank. For that reason, we have, the synergy with the bank, especially in that side. For that reason, maybe we are trying to make something as more double and more conservative. We have to do that, actually, and we are happy to do that, by the way. So, for example, in our cyber security and data security, especially department, more than 20 people are working there. And so we are investing there in terms of technology and human resources as well. And so, for example, especially in the insurance sector, it is very surprising for me, especially after banking side, there are many different tools in the insurance sector, and we have to integrate with each of them, agencies, digital apps, etc. So for that reason, we have to our awareness should be double than the bank, actually, for that reason. So there are some technical solutions about building our defense system. Of course, they have some cost for the company, but it doesn't matter for us, and we are investing and we are getting those kind of tools to build our defense system, first of all. The second one is the agency side and customer data. Of course, this is the first thing, the customer data protection. It is related with that, and I explain. The second one is that, especially nowadays, most of my colleagues will know that I will explain. There are many agencies overall Turkey, and some agencies are using, some tools to gathering all the information from different insurance companies. So, especially the insurance authority wants to get some precautions about them. And we are supporting that decision so much because sometimes we cannot directly deal with those kind of tools that the agencies use. However, sometimes maybe some of them cannot be as safe as the insurance companies use. For that reason, we have heard that, and we know that the insurance authority wants to get some precautions about those kind of tools. And at the end, I think it will be better for our sector.
Okay. I think we came to the end of our slot. I would like to thank you all and to our audience who was very attentive. I think what we get out of it is AI gives a lot of opportunities for improving decision making, for improving efficiency, but it also poses challenges. Efficiency is a good thing when you improve it, but then when we link it with the return of reinsurers, as we've seen it earlier, the question is, shall we not use it to improve that return? Having been a reinsurer in the past, I can tell you 60% of the cost of a reinsurer is linked with headcount. So it's quite human resource intensive business, not just capital intensive, with good reason. I will leave you at that, and I would thank you for very useful contributions. Thank you very much.
Thank you.
Thank you.
Thank you.